Welcome. My name is Stephanie Linhart, Europe Editor of The Banker, and I'm here with Bruno Magnoir, Global Head of Equity Linked at Societe Generale. Now, Bruno, convertible bonds, that's bonds which, after a certain period of time, can convert into equity. They have seen a boost in the last 18 months. Is that just related to the low interest rates and the booming equity market, or are there any other trends related to it?
No, you're absolutely right. I mean, there's a few factors. Convertible bonds are a sort of complicated animal. It reacts to equity, to rates. But the first and foremost factor is certainly equity. So when you have rising equity and high equity levels, issuers will probably look at that product more than before. But at the same time, it's also a bond. You've mentioned that as well. So if interest rates are low, you have an incentive to look at that market as an issuer. I think I would add a third and fourth factor. The third one is that you have an option in the product, an equity option. So volatility is also a factor which is important in this convertible bond product. And the fourth and foremost at the moment is the fact that we're in the issuer market. You have investors with a lot of cash looking to invest, and the fact that they can only invest or mostly invest in primary issues makes primary issues very interesting for issuers.
Mm-hmm. Issuer market you mentioned here. So we've seen last year, in the last 12 months, some zero coupon issuance. And even negative yields. So that's something that's quite special, because usually a bond pays interest.
Correct, and that's where, you know, as I mentioned, we've been in an exceptional sort of market for issuers. Last year, I think we've broken the barrier of 0%, and this year at SG we've led the way into what I would call the negative yield sort of wave, with some very incredible headline transaction. I would mention Aniel into Metro. You've mentioned convertible bond. This is an exchangeable bond. It doesn't convert into the company's equity, but into a stake which the company holds. So Aniel is a German company, holding Metro. It's a BB+ company, non-investment grade. And nevertheless, they managed to issue 500 million at negative yield, minus 0.57%.
So why do people buy it?
Well, again, convertible bond is not only a bond. It's a bond that could convert into equity. So really here, in this environment, special environment where interests are very low, the performance is around the equity. So as an investor, you believe that there's a strong equity story on the underlying, whether it's the company or the underlying and Metro, as I mentioned, and your performance will be made out of the equity performing along the life of the instrument.
Mm-hmm. Okay, well, the equity market is obviously an important animal here, and now at the moment we are sort of coming out of the summer period. At the same time, we've got some jitters out of China, with the equity market in China having a bit of a sell-off. How is that going to impact the convertible bond issuance going forward and the secondary market?
Well, we're going to see how the secondary market reacts, but certainly the fact that it's more than jitters. We've seen, you know, a significant fall on the equity market. So that has an impact on the outstanding inventory of convertible for investors. And looking at primary, I mean, coming into the summer or into the summer break, there've been a lot of projects that would come out in September. September is a traditionally very active month. Now that equity are down, we're going to have to look at stabilization of the equity. Certainly we need market to stabilize and hopefully to recover a little bit of that gain, because as we mentioned before, equity is one of the prime drivers for issues to look at that market. That being said, I think the equity-linked market is an interesting market when we look at diversification. Before the summer, we had another crisis, which was the Greek crisis. Mm-hmm. If you look at some of these companies like Airbus and Ingenico, which we led into the market, they went out in the market when bonds were closed, and they managed to get exceptional terms. We mentioned negative yield, but there's also the premium effect. And this year, we've seen premium above the 45%, which is probably unseen when you combine it with very low coupons.
Mm-hmm. Normal premiums are around 25%.
25, 35. We sort of increased that probably a little bit above the 35, close to 40. But this year, we've broken that barrier again and again, 45% for Salzgitter, 55% for Ingenico, Airbus, 62.5, a whopping 62.5. And again, this is in combination with a zero or even negative yield coupon. And that combination makes headlines. And the realization from CEO, boards, CFO, that this market could be an incredibly attractive market for shareholders.
A booming market. Let's see how it will perform. Thank you very much, Bruno Magnoire from SocGen.
Thank you, Stephanie.